Maybe we'll let's bring him in. Let's bring in our next guest analyst, Mr. Craig Bolanos. He's the co-founder and wealth advisor at VestGen Wealth Partners in Chicago. There he is. Thanks for being on the show, Craig. Well, today is CPI. Do we have a release of it yet here? I'm trying to look for it. 2.5 when we were expecting 2.4. 2.4 when we were expecting 2.5. That's okay. The market will like that, I think. What do you think?
2.4 versus 2.5. Month over month was lower. And for everybody who's so worried about the SaaS apocalypse, right? Software as a service, I've got news. All this movement of AI is going to be disinflationary. Let me repeat that. Disinflationary, bringing inflation down.
You are so correct.
So good news. So good news. Is anyone really worried that the market's 2.5% off all-time highs? Now, I know there's lots of stocks that have been battered and beaten down, and there's a ton of rotation underneath the surface, but there's a setup here for a fourth good year. Scott, I'm not calling for Dow 100,000. I heard the president might be, but I do think higher highs are going to be coming in 2026.
Yeah, I mean, this is but this is the problem, though. We get kind of a muddy, middling number on Wednesday with the non-farm payroll number, and then we get this is going to make the market like it. So I'm going to wait before I update everybody with these equity prices. But if you're an inflation hawk, right? If you're worried about inflation, you want this the rollout of AI to happen sooner rather than later. Because I agree with you what you just said there. I'm in the camp that I think that while we do have a risk of the Fed cutting interest rates into the ether, thinking that they're going to be able to stop artificial intelligence from taking away jobs that are never going to come back, which I think is a mistake on their behalf. But if you're worried about that, if we do see AI take off like I think it's going to, and I think it already has started, that is going to be definitely deflationary. It's disinflationary for sure. And that'll be a good thing for all those folks that are worried about what the Fed might be doing, cutting rates, trying to replace those jobs. So I think that bodes us, it bodes well for the next 6 months. So I'm in agreement with you. I think that there are some disinflationary things coming around the corner.
I definitely think so. And I think investors of all shapes and sizes are just going to need to be a little bit more active this year. That doesn't mean you shouldn't follow your core buy and hold strategies. But I think just if you've already seen AI attack what I call some of the software stocks, some of the software as service stocks, then we rotated into attacking the brokers. That just happened. You saw Schwab, LPL, a number of securities take a dive based on what's coming through. There's going to be this rotation. And I think every industry and every sub-industry is going to be challenged at one point in time, but I do not believe this is putting industries as a whole out of business. I don't think the pricing is a permanent repricing, but there's going to be a lot of VIX and there's going to be a lot of ability to maneuver all throughout 2026. I just hope people are paying attention to the one theme you and I have talked about now for the betterment of 6 months, which is for all the 401k investors that are out there, everyone who's got a 529 plan that's out there, pay attention to geography, because I think there is a shift at hand. And in 2026, this would be the first back-to-back year in some 15 years where international investments are going to once again outperform the good old S&P.
Right, and so that's a great point. You bring that up. So investors should be looking outside of our own borders for opportunities. I mean, is that? That's been. I know that's been good, over the last few years, but that continues. You think?
Well, it's been good. It's been good essentially for the last 10 months. It's only been 10 months. I mean, we had a 14.6 year record-setting secular trend where American investors were rewarded by being invested in America. But ever since Liberation Day, ever since April of last year, we've seen a shift. We're being in Europe and Far East, being in emerging markets. Boy, it's been the place to be. And that's a combination of the de-dollarization trade you've been very vocal about. That's a combination of the multiples that you and I have talked about. I mean, 15 is a cheaper number than 22. Again, 15 for developed Europe on the PE, 22 for the S&P. And I think people are just looking. Don't get me wrong. The growth outside of our borders is not fantastic. But when you look at valuation, rotation, and currency conversion, you got to say to yourself, if you're still only 3 to 5% international, and there's a lot of people like that, Scott, you're probably missing the boat.
Yeah. Yeah, I mean, I everybody knows I say it on my show, and I say it on this show too a lot. Having had 16 years over in England, It exposed me to a lot of those other opportunities that I might not normally have been, pulling up. And you're right. And also, as the dollar gets cheaper, if you're earning money in other currencies that are getting stronger, that also is a little bit of a wind at your back, isn't it?
Yeah, it is. It's a magnifying effect. There's no doubt. It's kind of a double levered, double pull, double throw. You make money, the raw return on the local side, you get a pickup if you convert it back into the dollar.
Yep.
And I do think the dollar is going to continue to get cheaper. I do think you're going to continue to see the secular move. Again, secular being long term, cyclical being short term, secular move in some of the precious metals, gold in particular. And yes, I do think the Bitcoin story is not dead, right? It's been interesting, it's been newsworthy, but how many times have we seen the price of everyone's favorite cryptocurrency get cut in half only to rebound thereafter? I would expect something like this is underfoot once again. Don't rush out. Risk budgets really do matter, everybody, but it's going to be one heck of a year.
Right.
I think we finished positive, but you got to buckle your seatbelt and put those tray tables up, because this second year of that presidential cycle with midterms, it's always the most volatile.
You're right. And you know what? I was never a fan of Bitcoin, but now that it's been cut in half, I'm looking at it. So I'm going to go on and this might not make you happy either, but I'm 35,000 bid and I'm 30,000 bid. So if it does come down and catch me, those are my resting orders to buy it down there. So we'll see if it does. But I appreciate you coming on, Craig. Thank you very much. Great stuff as usual. Craig's a co-founder and wealth partner at VestGen Wealth Advisors in Chicago. Have a great weekend, brother. Always great to have you on when we have some big numbers like we had today.